So we are back again. So we are back again. We are back again. So like I said, this is a good trade, and definitely this is the goal to take out this high, take out this high. That is the goal. That is where market is reaching. A little pullbacks. Don't worry about them. It happened because market doesn't move in a straight line. So we're getting that break and retest, break and retest. So Pasha, my voice in here clear. Hello, Pasha, my voice in here clear. Enek, Pasha, what you mean?
Metsonka, Metsonka na. Menzo, o kasa menzo jio. Nana,
Wow. Hi, quiet. Nobody's hearing me, right? Oh, I'm clear now.
I can hear you now.
Okay. So yeah, that is it. This is a clean trade, but it started taking off around 4 a.m. 4 a.m. It will hit full TP here. Even if price decides to drop deep, don't worry about it. It's just for to grab liquidity. It will still continue going up because currently it's reacting from this fair value gap. That's why it's dancing around. But once we hit a bullish zone, that can take price higher to break this high. Don't worry about the retracements. So mostly it's good if you catch the trade at the bottom like that, at the early stage of the market where price is turning to the upside. It's good. All right, so let's take the next asset, VIX 25. Okay, so from VIX 10 one is we go to VIX 10. And VIX 10 had been bullish all the way from this side up. There was a retracement back into a demand zone here. And when market hit that demand zone, the bearish trend ended and we have started a bullish trend. So this was the bearish trend, some kind of a retracement into that demand zone, right? So like I told you, this was the last high that was formed before market hits the zone. And after market hits the zone, it went ahead to give us that break of structure. or market structure shift. That is the first confirmation. The second confirmation is what we are waiting to get here. That is for price to break this high with the candle body. And it has done that successfully. All right. So the next thing is for price to continue to break the highs in this fashion. Price return to this other block, to another block here. Go to the lower time frame. And it's pushing up. It's pushing up. So VIX 10 is bullish. VIX 10 1S is also bullish. It's bullish. So the goal is to break this high. All right. So if you catch a trade, you can hold it to that high, but it's going to take a lot of days, which means that from the
So
first
sanitation.
for the first 3 months this year, you might see price going up this high. All right.
Mahama, when investors no be see anything.
So let's go to the 4-hour for clear structure, even as we are going bullish. So VIX 10 is also bullish. And see how price, after we took this high as a market structure shift, all right? Price had to retrace into an order block or a fair value gap in discount. So those of you that I thought the premium and discount to, price had to come below the 50% or 0.5%. And below that, we have this order block here, which price used. Right, so when price hits that order block, we are looking for a market structure shift. Why? Because when market was coming from this direction, it was bearish. So this was a pullback, and then it hits the zone. So we are waiting for that high to break and remove this line. We are waiting for that bullish structure to end, and this is where we had the market structure shift or change in direction, the initial. So here, price was changing direction from here. And after it took that out, it had to come towards below the 50%. I think I'm adding something up now. And below that, we have what this nice fair value gap, which price has used before. It came back to use it again. And it went all the way up till it broke this high, gave us a new high. So this is our new high. All right. This is our new high. And after that, price had to retrace a bit, and it came back to this demand zone here. And as it was coming, it was what? In a bearish fashion. So if you go to like 1 hour or 30 minutes, let's see. It was coming in a bearish fashion. Yeah. Low, a high, a lower low, lower high, lower low. We have hit the zone. All right. So this was the last high that was formed before price hit the zone. And when price violates it or break with the candle body, we have confirmed the bullish structure. All right. The bullish structure has been confirmed. So we are waiting for a deep retracement. Maybe back into below the 0.5. And look at it, we have a whole lot of imbalances here, which market can use. So all that I'll wait for is for market to return here. I don't care what is happening here. I will not participate. So market comes back to somewhere here, and I'll look for a buy position, right? So even here, we can confirm from here, market structure shifts. But there wasn't any return. Price didn't come by. It will eventually come, so don't rush. Right? Don't rush. Maybe when price hits this zone. When price hits this zone, it might come back. So don't rush. So we are bullish on VIX 10 as well. But I want to see price return to this zone. So I'll mark this zone like this and wait. And when market is returning, it will come in a bearish format. Once it hits the zone, I'll wait for a market structure shift return, and then I'll take it up. Because from the higher time frame, I'm bullish. So that is how I'm going to follow the price action. So that is VIX 10 for us. VIX 10 is also bullish. Any question up to this point? If not, you take the next asset. So we are going towards this high. And for trend line traders, it's a nice liquidity zone. So if market even decides to drop deep, this is a zone that has not been mitigated. Maybe if the trend line gets broken, markets might also come back here before it takes off. We are just watching to see. We are just watching to see. One key thing you need to understand is market structure. It's very key. As for market structure, it's very key. Market structure. And then maybe directional bias from higher time frame is very key. So let me take the next asset if you have no questions. It's 25 1S. It's 25 1S on the daily time frame. We can see we were bearish onto this zone. All right, and this is the last high that market formed. You go to the line graph, this was the last high. And market broke that. It went away, so we turned bullish from here. That was the first confirmation. The second confirmation was when market also broke this high. All right. Now, price should have returned to this order block or demand zone, but it never did. And then we created another demand zone here. Or order block, if you like, that made us break this high, gave us this break of structure. So this zone held price. The market never came back down. And you can see that here, when market was coming, it was coming in a bearish format. So when you switch to the line graph, this was where we had the market structure shifts. And then we confirmed it with what? A break of structure. A break of structure. And market had to return to an order block, and it came to this order block. For some reason, it bought and was able to break this high. So we are still bullish. And right after markets consolidated, here there was a consolidation. And then we broke out of the consolidation by coming bearish. So we shifted structure again, market structure shifts, but Oga decided to run away without looking back. So we had a break of structure here. And we have been going up in that fashion. The goal is to break this high. The goal is to break this high. You can see that, Charlie, this asset has really bought. So on the daily time frame, we couldn't have found any nice structure except that all the red candles were very minimal. The green candles kept breaking the red candles to the upside. So that was a strong bullish structure confirmed. All right. So we can switch to a lower time frame like the 4-hour to see the bullishness where we could have participated. And you can see that the 4-hour is giving us some kind of a structure. Some kind of a structure. So let me delete this one. So there was a clear change in direction here. A market structure shift happened here. And this is the demand zone responsible. All right. So market had to return into it to confirm, and it did. Although it appeared like it was going to break it, but it didn't. And then it was confirmed by breaking the structure to the upside. Yeah. So we were going to wait for that deep retracement back into 50% of this high, or let's just say even this high. But it never happened, so we had no trade. It just moved away without us. That is fine. But assuming market was going to retrace below the 50%, somebody should tell me where market could buy from, with the knowledge you have. Sorry, am I talking to myself?
Please, the question again.
So I said, This is our dealing range. So from premium and discounts, I was going to wait for markets to return to below the 0.5%, but it never did. But in case market was going to come there, where is it likely to have bought from? Below the 0.5%, this line.
On the
Black line.
on the fair value gap there.
Yeah. So there's a value gap here.
Yes.
And it confirmed this order block for us. So you might want to wait. It never came. So we missed that trade. And if market had come, it would have come in a bearish format. All right. So once it hits the zone, you wait for the last side that was formed to be violated to confirm a bullish structure or market shift for you. And you wait for market to return to an order block or a fair value gap to buy up again to break this high. So this is a double confirmation. When we have this break of structure, if market should return back, look for fair value gap or order block within the discount zone. All right. Use your premium and discount. So I think I shared that video. I don't know whether you watched it. Wait for market to return, then you buy. So for this one, we didn't have an entry. But let's keep going down to see if you could have had an entry on any of the lower time frames. All right, so it didn't really happen. It didn't happen. It just ran away. A very nice fashion. But on one now, if you want to follow price, you had this break. And we also had this break here. And the other block responsible or demand zone was this one. But price liquidated the zone again and then bought to break structure. So it gave us this high. And we're going to wait for a deep retracement into this fair value gap in deep discount, but it never came. Went ahead to break even this tiny one. And it just kept running away like that. It left the fair value gap, it didn't come. We had another break here. Here, there isn't any such clean order block except for maybe this candle here, the red one. We never reached in there. So those of us that know rejection block, this is a rejection block, but don't worry about it. The ICT stuff is just too many. If you don't know it, don't worry. Price came to mitigate that week and use that week to buy. And it broke structure again. So what is the demand zone? This is the order block, the fair value gap, but price never came, the fair value gap area. It went ahead and gave us this high. So from this low, we had this high. If you pull our premium and discount to, we are going to wait for price to come below the 0.5, but it never did, so no trade. As we missed that part, it went ahead to break this high. And where is our order block? This zone is at the order block because it has a fair value gap above it. Beneath it, there isn't any fair value gap, so price is most likely not to return there. So from there, we had markets kind of becoming rangy. And it swept the low, but it didn't touch the zone. So this low even became liquidity. It pushed up, swept liquidity. Now it came back to sweep this low and tap the zone. And it decided to move away. Came back again, move away. Came back again, and the zone held. Look at it. So we had a market structure shift from here. And our order block is this one. And look at the fair value gap. Our price never came. This asset. It just didn't want us to participate. It broke structure. And ideally, it was supposed to withdraw deep back into that order block. So no trade for us. It didn't come. Right? And we had this tiny break of structure here. And the order block responsible might be some 30-minute order block. So maybe go to 30 minutes. Um, okay, so the 30-minute order block is clear. This candle here doesn't even have a fair value gap, but price decided to use it for some reason, and it went ahead and break what? This high. What is the order block? Same order block zone. At this time, maybe around this area. Maybe 15-minute order block. That was what price used. So for those of you who are interested in learning ICT or SMC, you can engage me, right? My interest is not the money. My interest is your seriousness. I don't want the case where we have a date and you will not show up. So if you pay and you don't show up, means your money is gone. You missed 2, 3 classes, that's all. We cancel the appointment. We can see that after that break of structure here, your premium and discount too, maybe. We are waiting for market to return to below the 50%. And below the 50%, we had this order block, which price used severally and finally violated again and decided to come to the extreme one. So actually, I wouldn't have traded from here because of the many wicks here. They have treated them as liquidity zone. And so we swept them, created another liquidity before that order block. And market came as soon as it swept that liquidity, took off in a very nice fashion. Went ahead to clear the side by breaking that structure. And where is our order block? We only identify the order block after a high has been formed. This was the high that was formed. From this low to this high, you wait for price to return below the 0.5%. And we have these demand zones there. So you stretch it out in time. And you can see that that was the area market later sort of came to react from when it started dropping down. This was an unmitigated zone. So you don't just treat it, you don't just disregard it because price is to take out the high. It has not taken the high. So all the deep retracements, all the unmitigated zones that you marked out still act. We have a break of structure here. And market established this high, went ahead to break it. So this zone was not attended to from our low to our high. Our 50% zone is somewhere here. And we have this imbalance here, which price has not mitigated. If you stretch that out in time, in case in the future market you want to buy deep, sell deep, maybe it will sell to this zone and then start buying again. Start buying again. So here we had a break of structure here, right? And the other block responsible is this extreme zone. I see that market has come there to mitigate the zone and it's now moving away. So I'm going to give us a setup for this 25 1S. I think you have a setup to trade today if you want to trade. When market touched the zone, it cleared this liquidity, right? This low, gave us a market structure shift. Where is our order block? Our order block is somewhere here. And look at the fair value gap above it. So market treated this as an inducement liquidity or liquidity, simply, and it tapped into the order block. And look at it, it's flying away. So this is a nice one. If you were watching, after the wick tap the area and close as a pin bar, I'll just enter my stop loss somewhere here. Then I'll still go for the high because that is where we are going. That is where we are going. So for a swing trade, you can hold this and keep following price. Currently, we've had a break of structure here. Okay, so this zone is already done. Currently, we've had a break of structure here. Let me delete this. And we have this unmitigated order block, all right, with liquidity sitting on top of it. So in case this sell, you see pin bar rejection after we clear this liquidity. If market is going to sell, then I'll expect that it sells deep into this order block, clear that liquidity before we go up. So watch this area for a buy. Let me post it on the page. Maybe let's take a take profit somewhere here. If you're enjoying the class, give me a thumbs up in the comment section or the chat box so that I can know you are following.
My reaction is not working.
Oh, okay. Okay. Just type anything there. Anything like I'm enjoying. Maybe you can type one, you can type two. So kindly hold on for me. I'll be back in a minute. All right, so I just posted the setup on the page. You have 1 minute to end this video, and after 10 minutes, you will start again. Continue with the rest. Continue with the rest. So I can't start in analyzing any new one because I might not get anywhere and the time will elapse. So we have like, okay, so 2 minutes. So this is it. This is it. This is it. This is it. And those of you that are willing to learn, start afresh, like start afresh, can hit me up. Let's arrange a class. All right. I have one student for now. Maybe want some more students so that
Catch a referee.
we start all over. I have a strategy I have developed. I want to teach you that strategy. And any new person that will subscribe, like you don't know anything about Forex, that is the strategy I'm going to teach you. You master it.
That's a bright. But your family, your bob, for why me looking at your boss, and I'm fine. Is it the referee said? No, why?
Oh, okay. So we have 6 minutes. Let's do one asset more. I think I didn't check the time well.
Verse 50, boss, can we look at verse 100 one is?
This 101 is okay. 100 is 101 is we know it has been bearish, right? We had this liquid and we had a market structure shifts from here. The other block responsible for giving us that market structure shift is this one, which has not been mitigated. So you mark this one out. Market has created this liquidity as an inducement because this is also an order block. So the early sellers might want to sell from here. It may sell small and then push back up or we go down. So currently price have traded into this order block, which was not mitigated. This is what is likely to maybe push price back up at this zone before we see a further sell. On H4, you see a bearish structure coming. H4, it broke this low. We have had another break of structure, and we've tapped into the zone. When we switch to the line graph, we are creating some small, maybe if we get the body close above this, that is a market structure shift. So we look for further confirmations, and then we take a buy towards this region. We take a buy towards that region. I'm also babysitting, so that is that. So maybe on our 1 hour, let's see. We are still within the zone, and we are still within the zone. We are still within the zone. We have this low being broken. We have a break of structure here. The supply is not responsible. Is this? If price breaks this side with the candle body, we have this supply zone which has already been mitigated. So maybe we validate this high. That is all. You look to buy more to the upside. For now, I think that is all I can say about this 10 minutes. That is all I can say. Looks so nice. We keep breaking structure. We keep breaking structure. So a high was formed here, and it has formed this low for us. So I don't know if this is going to be a trading range. Then from this high to this low, 50% range is here. And if price decides to buy up, we don't have any zone here that price will want to mitigate because there is no fair value gap up there. So it will look unattractive. Price will just blow through. Price will just blow through. Look at what price is engineering. A very nice trend and liquidity as we are going down. And that is this 10 one is 100 one is sorry. Any other assets?